Fin the Week is brought to you by Indulge, a digital agency built on thinking for the global financial services industry.
Hi, I'm Amelia.
I'm Russ.
And Pat.
And this is Fin the Week. How is everyone?
Good.
Yeah, good, thanks. I think I had my best LinkedIn post impression rate this week.
Oh, what was it about?
And it wasn't about website design or app design, but it was UX, but it was UX for baby clothes.
Oh, I saw this actually.
It's had over 33,000 impressions so far. And about 250 engagements, and it keeps every time I log in, someone else has liked it from around the world. So, and
that's amazing. For anyone who hasn't seen it or doesn't follow you on LinkedIn, what is it about?
Right, it's okay. It's about, maybe we should change the title of this episode actually, but it's about on baby grows. You get two different coloured poppers for the male and female poppers, and they're normally kind of they normally look orange or they're brass. But if you start with those first, all the rest of the poppers kind of snap into place. It's quite confusing, especially if you're doing it at 2 or 3 a.m. like I had to last night. It's quite difficult to line them all up, especially when the baby's kind of wriggling around. So yeah, it's amazing. I've really touched a whole audience of parents, and also people who had no idea that these kind of handy little features existed. So I wasn't expecting it to go viral, but it did. There you go.
Nothing like tugging on people's emotional heartstrings to generate impressions.
It's a great design feature, and it's given me an idea for like more LinkedIn content. Just looking at those really simple, genuinely good design features that actually help people in their lives. Not only just highlighting them to people for it to be inspiring, so maybe they can like put that into their work, but yeah, just like celebrating them really. So yeah, I'll try and find more.
Everyone connect with Russ on LinkedIn for more of this content. No, but it was obviously struck a chord with a lot of people. So it is officially the anniversary today, 3 years since Consumer Duty came in for open products. It's the final Teardown episode of Anniversary Month. So if anyone hasn't caught up on the last few episodes, Russ, do you want to briefly explain what these Teardown sessions actually are?
Yeah, so we've been going through, we've been looking at different segments in the finance sector. We started with, it's a while back now, didn't we? We've kind of looked at robo-advisors for investment. We've looked at mortgage brokers, and we also looked at bank switching as well for the first one. This what we're doing is we're looking at these of the journey of someone landing on these websites and looking at choosing a product or finding advice, and perhaps contacting these firms and seeing whether that journey aligns with Consumer Duty. Also using our tool UX Duty, which automates the kind of scanning of these websites and gives us back a set of recommendations, and then we're just discussing them in the podcast.
So that's what we've kind of done so far, and we've saved arguably the most regulator-charged sector for the last week, and that is protection insurance, specifically life cover. Why are we looking at this? Okay,
so FCA recently announced the areas that they have active open investigations. So we thought we'd peak in the insurance sector, because 7 out of the 11 open FCA active investigations are in insurance. So it feels like a good way to end, just because there is, they haven't actually issued any fines, but it's a big focus of theirs.
So let's jump in, shall we? What types of firms have we looked at this week?
So I know in previous podcasts, if you've been tuning in, we've been looking at different sized firms. We actually took a slightly different approach for this one, and we looked at firms that offer life insurance specifically in slightly different ways, just to give a kind of a broad view of the landscape really, and see perhaps if there was some common trends. So again, we're not saying the firm's names on these podcasts. We're not kind of calling them out. A similar stance to how FCA are operating, communicating their investigations. So we have Firm A, let's call them. They're a direct insurer, so you would go to them and they would insure you. We've got a comparison site or an aggregator as Firm B. So you kind of land on this site. There's some really popular ones where they kind of look at different direct insurers and find the best deal for you. And then we've got Firm C, which is independent financial advisor, so kind of broker. So three different ways of finding that insurance product across 3 different firms.
And what's the process that you took them through?
So we picked the journey that a user would actually go on, land on the site, try and look for a product, try and understand what they're going to be buying, and then start the application process. There's normally 6 or 7 URLs in this journey, and then our tool UXGT scans those URLs. Then we've kind of gone through and validated the findings and pulled together some common themes. So essentially it's looking at each URL and then analyzing it against the 4 consumer duty outcomes. So products and services, price and value, consumer understanding, and consumer support.
So that's what you've done. And as always, let's start with the overview of the kind of headline findings.
So 109 findings across the 3 firms. And the common trend is that around about half of those are accessibility. So we've kind of found that again. Yeah. And all of them came back as high risk. And it was quite an equal split in terms of how many findings per firm. Firm A, I mean, this is really quite interesting, just reading this now. Firm A, although it's not the largest tier in this version, previously it was actually the biggest firm had most of the findings. This time it's the direct insurer that has the most findings, followed by the broker, and then followed by the comparison site. So that's kind of how it's split up. I think the high risk is because the way we're looking at it is if there is anything which could be perceived as serious, then that's a kind of compliance risk, which would naturally mean it's quite sensitive. So we wouldn't want to kind of label anything as medium if there was potentially a breach. So it is quite a sensitive rating, but I think that's quite common across compliance teams, as we've discussed before.
And is there anything there in general that has surprised you?
I think because we've done this now a few times, I don't think the accessibility was a huge shock, and we can talk a bit more about that. And I've got a little summary at the end which looks at accessibility across all of the firms. So I can kind of explain that in a bit more detail. And there are some themes that we've seen from previous teardowns as well. So yeah, nothing hugely surprising, but I can kind of discuss that in a bit more detail.
So shall we get into it then? Sorry, Pat.
Sure, I was going to say there's one surprising. There's one finding that is kind of sad in that it is unsurprising. Yeah, but we'll come on to that in a minute.
Yeah, I think I know which one that might be, Pat.
Yeah.
A little teaser for you there. So shall we dive in? What is the first finding you wanted to discuss, Russ?
So I think you land on these websites and you see this big headline, get your life insurance for £3 a month, £4 a month, £6 a month. It feels very much just to kind of draw you into the process. And from a consumer duty perspective as well, it's not really clear who is eligible for that amount. And it seems to be a common trend. So for example, I think it was Firm B. So they have at the top, it's £5 a month per cover. And then it has the kind of dreaded asterisks. And you see this on a lot of websites. I think we've seen it on bank switching. We've seen it on mortgages. Where is the explanation of that asterisk? Well, you have to find it on the page. It's normally in the footer. You can search for asterisks if you're kind of a bit more savvy using your computer. You can do like Command F on a keyboard. You can look for asterisks and you can find it. But normally it's kind of hidden away. and it's hidden away quite small. So what's a little bit confusing with comparing the three sites is that they all seem to have different ways of creating that headline number. So, for example, one of the firms has a really low monthly rate, and it has an asterisk, and then it says it's based on a 25-year-old non-smoker with level term with insurance for 100,000. And then another website has a headline rate for like £5 a month, and then that's for then it says 50% of our 30-year-old kind of audience has basically this figure, but there's no critical illness cover with it. So it kind of comes back to what we've been talking before, is that you have this big loud headline, but yeah, the explanation of it is actually like aligning that with your situation. It's almost a little bit meaningless, and these websites lead with it. It's quite psychological in terms of the way that they're portraying these big headlines. Your kind of monthly value, because you land and then you perceive that you perceive that you can afford it. You kind of get locked into the process. You go through, and then you realize it could be, 10 times that amount. So from a consumer duty perspective, they're not specifying the target market at a granular level at the first point of the product life cycle. So that was the first thing I noticed. It definitely seems to be a common theme across what we've been looking at, these headline costs with no transparency about whether they're for you and whether there's any hidden terms. It was apparent here again.
So what would happen is you go onto the website, you see the headline. The vast majority of people would believe that, I guess. They make an inquiry, salesperson calls them up on the phone. They're into the system. They realize the person is 38, has had sort of is knocking on the door of like type 2 diabetes or whatever, has been in hospital with this and that. And suddenly it's like £98 a month.
Yeah.
Which is like much more, you sort of, that's £6 a month for 200 grand cover. They're singling out like a really tiny proportion of the population, aren't they?
Do you think
most people aren't going to be like 25?
But do you think it kind of matters? Because do you think ultimately once somebody's got into that system and once they've started, they're like, oh, it probably was a bit too good to be true. Do you know what I mean? Do you think it does matter? Because do you think people are being drawn in by that headline? And is anyone actually reading the small print?
Well, I think it's about finding the best deal, isn't it?
Yeah.
So if the user has a phone call with a salesperson, they go back and forth for ages, are they going to want to do that 5 times with 5 different providers? They're probably not. They'll probably just go with the one they started the journey with. And as a result, they won't get the best deal.
And also, it's like, is it in line with the outcomes of consumer duty, where price and value is one of the outcomes? So you could lean on the side of the firm and be like, they want to get business, so they're trying to put the most attractive rate there to get to kind of lure people in. People will figure it out as they go, but they have a duty to the consumer to have fair and transparent pricing from like end to end. So if it's misleading, which it is really, then that isn't in the spirit of a consumer duty. But we've just seen this throughout. I don't think it's something FCA would intervene on, because people do figure out eventually the kind of deal that they're going to get, unless they called up and said, we've seen your £3 a month, let's just sign up and you just charge me whatever you want, and then they charge you £100 a month. Obviously that would be quite a big issue, but I think there's kind of there's processes in place to stop that from happening. But yeah, that was one of the first findings, and something we've seen quite often. Also, again, the kind of small print is under the text size we would expect for it to be accessible. So we talked about 16 pixels. Last week, gov.uk adapted their design system to move up from 14 to 16. The British Dyslexia Association also recommends never going below 16. So, I think we saw 9 pixels last time, so we're nowhere near that. But the firm B, especially where they had this about the headline had no critical illness cover included, which is really surprising for a headline number because you'd imagine most people would include that in their life insurance. That text was also in 13 pixels, so it is quite small. Not as small as we've seen before, but if you're thinking about vulnerable customers and supporting them, then sticking to 16 pixels for something so important is really important from a UX perspective.
Shall we move on to the next finding? And this is all about consent, right?
Yeah. So this might be the one part that I'm just saying who was best to cover this one, actually. If anyone's tuning in, might have noted Paul's not around this week. So if we're a little bit all over the place, he's not here. But
yeah, this is the one that was kind of sad that it is unsurprising because it's just a kind of flagrant breach of GDPR, and you just see it everywhere. You see it everywhere. And we talked about it last week, and that is that you've got Firm A's homepage as a consent or marketing checkbox pre-ticked on page load, meaning that the customer has not opted in. They actually have to opt out, which is explicitly against GDPR. And it's, the result, the reason companies do that is because if you ask people to opt out, then 80% of people will not bother, and your mailing list will just kind of expand in a really healthy way. And a mailing list is a really powerful way to market to customers. You get a really good conversion rate. But if you ask people to opt in, then maybe 5% of people will actually check that box. So your mailing list just does not grow and it doesn't really become a useful tool. So the incentive to pre-check a marketing opt-in checkbox is like really, really compelling. Despite it being illegal, you still see it on regulated firms' websites.
Is there repercussions to this? I know you said it's illegal, but if these big firms are doing it, is it because they just know they're going to get away with it?
It's largely unenforced. There was a case in Guernsey under the Guernsey Data Protection Law a couple of years ago, where a customer was looped into a mailing list without permission and started getting marketing emails. And the local data protection office actually dragged the company through court and issued them with like a 10 grand fine. But that's really the exception. Probably maybe 20 or 30%, maybe even more of marketing checkboxes on the internet are not implemented properly. And enforcing that across the board is basically impossible. So I think the regulators would probably wait for customers to actually complain. And then they'd probably reach out to the site or the provider and say, you need to make this change. And then that would be the end of it. But I don't even know how often that happens, to be honest. I don't think people even realize that it's illegal to kind of configure your checkbox in that way. I'd be interested to see on Firm A, Russell, whether Firm B or C offered confusing wording as well. So uncheck this checkbox if you do not want to be on the mailing list, for example, double negatives, and so that people accidentally opt themselves in, because that's illegal as well, because it's not clear.
Yeah.
And the other thing at the Firm C you mentioned here, bundling privacy policy T's and C's and about us into a single checkbox so the customer can't meaningfully consent. That's pretty serious as well, because with consent, you need to understand what you're consenting to. It needs to be clear and written in layman's terms so that you understand what you're consenting to. And it's fine to link to your privacy policy, but in the message alongside your checkbox, it should say, I consent to Firm A using my details to send me promotional emails related to campaigns that we're running, aligned with our privacy policy, and then into the privacy policy. But the core purpose that you're opting into should be in that message.
It feels very sneaky, doesn't it? It'd be very interesting. I'd love to know how these conversations go down within these firms. How are we going to get around this? How can we word this? Does that sound a little bit misleading? Does that sound misleading enough?
Yeah, most of the time there'll be an in-house counsel or lawyer saying you can't have that pre-checked, or there'll be an agency saying our recommendation is to make that unchecked by default, and then you'll have a marketing director on the other side saying, I see it everywhere, we can get away with that, and actually it'll be really powerful marketing tool. And I think there's probably tension between the two warring sort of factions in these in these firms. And in some firms, the legal team will win, and in some firms, the marketing team will win. And that's probably how it pans out.
What's the kind of solution to, because it's kind of, from a cognitive perspective, it's very confusing, and it's not just a one-off. Like, it's almost every site, there's like the kind of double negatives, and they try and almost trick you into signing up for things. I guess what can users do to try and make the web just a bit better and easier? I guess complain, by the sounds of it, from that case there. But I think then, like, people just wouldn't complain because it feels so minor, and also you wouldn't want to get dragged through court, like explaining how it's, affected your life, and you're really kind of quite frustrated by it, even if there was something at the end of it. I don't know. I mean, with AI, we've kind of got our scanning tool here. Could kind of AI just call out all of the instances of this, produce a report, send it to the FCA or the authorities, and then it's kind of up to them just to go through one by one and like clamp down on it. But I guess it would be quite a big job unless you sent an AI agent off to do that, perhaps.
I think what we'll probably see is browsers that lead on privacy, like Firefox or Brave, we'll probably start seeing those browsers integrating some form of kind of large language model based processing into your browsing experience, so it can actively navigate your way out of checkboxes that are kind of confusing. Do you know what I mean? I suspect we'll probably see something like that. And we'll also see a rise in I think we'll see a rise in AI agents just filling out forms on your behalf. You can already do that. Claude has computer use. ChatGPT has computer use. I haven't used it loads because it's quite slow, but I've got friends who routinely ask Claude to fill out forms for them instead of them doing it. And even though it's slow, they're happy to just sit there and watch Claude fill out the form while they do something else. And an AI agent will do a much better job of like picking up on double negatives and confusing wording and opt you out of everything that you want to be opted out of. So I think this tactic over time will become less useful in terms of collecting mailing lists. I also think, and this is probably a wider discussion for a different episode, but I think email marketing itself is going to become a bit compromised. I've personally seen a huge increase in email marketing campaigns hitting my inbox that aren't getting caught by spam filters because there are tools out there that use AI to scrape data and use AI to write emails and email mass emails out on a mass basis without people opting into them at all. And as a result, I think we're going to see a rise in AI scanning your inbox for marketing messages and adding an extra layer of spam protection and just deleting anything that you didn't subscribe to. Honestly, like every morning I come in and I've got a wall of spam.
Yeah.
And it never used to be that way. And then in my Gmail spam box, I've got like 100 messages, and then I've got like 20 messages in my main inbox that Gmail didn't catch. And the Gmail spam filter is best in class. And it never, 2-3 months ago, it wasn't like that. And it's just going to get worse and worse. So I'm actively looking at how I can run a large language model across my inbox to filter out this noise. And it will just, like, tools like that will become more prolific. And I think, I don't know.
I think
if you haven't opted into something, I think it's going to be hard to communicate with that person.
One of the challenges
even if
that we
haven't unchecked something. Yeah.
I think one of the challenges we have, though, is both the attack and defense is getting more sophisticated. So we're probably going to end up with forms created by AI to get around the fact that an AI is looking at them to try and stop people signing up to these mailing lists. So you kind of, someone's going to be creating a form for AI knowing that another AI is going to be looking at the form, and you end up with just things more and more sophisticated and hidden. And I don't know. The challenge is it's going to be difficult to kind of go away for that reason. Shall I move on to the next point as well, Amelia, just while I'm
shall we?
in flow, because it kind of ties together. And I've got a bit of a theory, and it'd be interesting to see what the conversion rates are like on these sites, especially the comparison site. I've got a theory that it's probably quite high up in their agenda to collect personal data. because of what we're talking about with pre-ticked consent boxes, small print terms. I wonder what the conversion rate is. Is it 1%? Is it less than 1%? Or how much they gain in comparison to someone signing up to life insurance products with the data that they're collecting from that person while they're signing up? Especially if you're unclear where that data goes. Is it being sold to a third party? Is it being used for marketing purposes? Is that another revenue stream for them? Like, data is kind of power in these kind of worlds, isn't it? And if they're making it complicated to sign up and hiding the terms about what they're doing with it, and when we looked at last week as well, there was a complaints form where you had to email them to opt out of their marketing email list after you completed it. So yeah, and that's this. The third theme was that it feels like all firms are collecting personal data before telling them whether the product is for them, which comes back to the eligibility again. It's a clear rule within consumer duty that these firms need to specify the target market for the product sufficiently at a granular level. And they're not doing that. Or if they are, it's very small print, or there's like hidden ways to they're trying to manipulate users really. They're using dark patterns for them to kind of join their mailing lists. There's definitely an agenda for these firms to capture that data, for sure. So, and that seems to be across all of the teardowns that we've done.
There's two viewpoints here. Obviously, as soon as you start capturing health data, you snap into a higher grade of GDPR with much tighter restrictions. So you have to be, and if you're capturing health data without the appropriate permission, like, you could genuinely be in real trouble because that is enforced. But on the flip side, you could argue that these firms need a bit of health data to determine whether their product is a good fit for you. So I think you'd probably find that as long as at the beginning that there's a privacy statement that says we are going to collect personal data and health data for you in order for the purposes of us recommending a suitable product to you and for no other purpose, tick opt in, I'm happy with that, proceed, that's fine. But if the process is £6 a month, 100k cover, tick here to proceed, all the marketing and privacy policy checkboxes are pre-checked, and their first question is, have you got any morbidities? Have you suffered from cancer? What's your age? Have you got any pre-existing illnesses or treatments or conditions? And if that's the first thing they ask, along with your name and your email and your telephone number and your social security number, and then they tell you we can't help you, and then a week later you get 6 follow-up emails saying you haven't finished the process. By the way, here's some other products. That is just completely illegal.
Yeah, it feels like that. And I had a phone call yesterday. I was, I don't know, you're talking about emails, Pat. I seem to be getting more like cold call, like phone calls than ever before as well, almost like every week. And to the point where if it's not a number that I recognize, I just don't answer it anymore. If it's a block caller, that's a complete no-no, obviously, if it's an unknown. But even if it's not a number I'm familiar with, because do people really pick up the phone and call people like that much these days? Like, yeah, I guess you do, but people on WhatsApp and social media and, platforms like that who So normally unless I'm expecting a call, maybe, I've called a store and they were going to call me back. If it's out the blue, I just tend to ignore it because they'll find another way to contact me. And I feel like it is going to be one of these sneaky ways that they've captured my detail.
I use the iPhone's call screening feature. So whenever someone phones me that aren't in my contacts, I get a little voicemail saying, "Hi, it's John from XYZ Limited to speak about this." And then when it rings on my screen, it tells me this is John from XYZ Limited. And if I know who it is, I'll answer it. If not, then they'll just leave a voicemail.
I didn't even know about that.
Yeah,
it's
cool.
really useful. Android has it as well. It's a great feature. It does catch out some people who aren't techie. Sometimes they get kind of confused. What's this? With kind of voicemail through, but it is useful.
I've had this one person's been calling me back and saying, "What company do you work for?" And I was like, and I keep saying, "I'm not going to disclose that information." He was like, and he said, "I'm just going to keep calling you back then until you tell me."
Wow.
Yeah, that's pretty pushy.
Yeah, that's one tactic, isn't it?
I'm definitely illegal. Trying to sell me something and just filling out a form, like a profile form. So yeah, I think after a couple of calls like that, I'm just never going to answer any calls again.
Yeah, what you need to do is say to him, I'm just busy. Can I just have your name and email address, please? And get it off him. And then issue a subject assets request, which by law he will have to respond to. And it will probably generate up to 2 or 3 days worth of effort on their side to respond to it. Because they'll need to hook out every single bit of information they have on you and compile it into a report and then send it back to you.
Well, this is the other thing. Like, people just are so time poor. They just want to kind of get on with it. They just want to get on with the process. And these firms are, they're kind of playing on that. They know people don't have time to read these kind of complicated, like, opt-out messages or ask people for like subject, like access requests and deal with that and go through it all. People barely have time to like just fill the form out or speak to these people on the phone. They're busy at work. Busy with kids.
Claude to do a subject access request for you.
Yeah.
In 2 minutes.
I just think people just want to get on with their lives and just almost find the kind of easiest way through all this. I feel like these firms play on that people just want the path of least resistance. So they just want to kind of go through these processes, and then, all your details are captured. You kind of just want to tick the life insurance box that you've got the products in place, that you have some cover there. If you ask most people what's in their life insurance, they'd probably, if you've had it for like a few years, they'd probably even struggle to tell you exactly what they're covered for without even, going into their handbook and finding out perhaps when they most need it.
So shall we move on to our next point, which we touched upon earlier? This is about complaints procedures.
Yeah, so this is, again, really important in line with consumer duty, because the vulnerable customers, specifically making the complaints process really easy to follow and find. But also they could be in a position where perhaps they don't have the confidence in managing their kind of finances, low literacy, low digital skills. So if they are having a problem with the process or communications, for example, they might need to make a complaint. So it's really important for those customers that the complaints process is accessible. I think, as we've discussed previously, some people feel more comfortable speaking to a human. One of these websites specifically made it extremely hard to speak to a human. Definitely some dark patterns going on through their contact process, which is really frustrating. And you've probably been in those loops before. In retail, seems to be happening here with life insurance. The comparison site specifically that we're looking at, Firm B, to the point where you end up on a page which says, should you wish to use an alternative means of communication, so that's not the online form, on request, we are happy to correspond with you by telephone. That's the dead end that you end up at if you want to speak to a human, which is really, really surprising. And it's quite a well-known site. Let's say you have access needs, or confidence, or you're low kind of digital confidence using the website. They're kind of assuming everyone can get on these websites and complete online forms and send emails. That isn't always the case. It certainly isn't the case when we're talking about vulnerable customers and supporting those. Just have a phone number or a callback form at least. It's very vague as well. On request, we're happy to kind of correspond with you by telephone. So that they aren't even committing to give you that phone number or to call you back on the phone. So that's a real surprise. It's definitely not in the spirit of consumer duty. Again, screen reader issues have cropped up in the on the complaints form. One of the firms, there was no quick way to jump between the sections, missing alternative text on images. So the screen reader users won't know what the image is. Just real shockers, really, on such an important form.
Do we think that firms are making it this hard to reach a human on purpose? Or is it just poor design?
I think you have to, like, in the case of if you went through that process, then they're making it difficult on purpose. I don't know whether it's to reduce administration costs or because they just don't want the responsibility of kind of dealing with that call, perhaps, and what kind of comes with it, like the kind of like kind of the follow up. But yeah, from a vulnerable customer perspective, or anyone wanting to speak to one of these firms about the products that they're looking at purchasing, speaking to a human should just be just a core part of one of the user journeys. And I mean, I can move straight onto the fifth point as well. Now we're on screen readers.
It's our favourite topic, isn't it?
Yeah. And actually, I was going to mention it on the final theme, this recurring issue with kind of screen readers, is that the complaints page on one of the firms, it doesn't have a H1, which if you know anything about creating a website, then it's one of the most important and semantic kind of areas of the site to include. So if you imagine someone looking at this page with a screen reader and they've perhaps clicked on a link, the H1 is what kind of tells them that they're on the right page. So not having a heading, not having the complaints page title wrapped in basically HTML H1 heading tags, it won't tell the screen reader that they're on the right page. So they won't really know where they are unless they start going through the form. Then they might be able to figure it out using form fields. And I tested this out using Mac VoiceOver as well myself. So yeah, I just can't kind of fathom how things like this get through quality testing on the kind of key pages. I'm hoping Consumer Duty itself as a set of principles helps firms to kind of start getting this stuff right.
These accessibility issues keep coming up time and time again. All 4 of the teardowns, this has been like the biggest issue. Why do we think this is?
Just down to not taking it seriously enough, probably not understanding it seriously enough. I discussed in a previous episode about how to get accessibility right, you need to have a team that understands and prioritizes it from the beginning across both design, creating the designs for that website, and also implementing it from a technical development perspective as well. And because it's quite a technical kind of, sadly, quite a niche thing in the digital world, it shouldn't be niche because it's really important, but it is. There are many digital teams out there that don't take it seriously as they should. And they'll design and build a site that visually is impactful, visually ticks all the boxes from the client's perspective. And they might even run a quick accessibility check at the end, but it'll still miss a load of stuff. And then you've got kind of, as the site evolves and as the content updates and new pages are created, you need to stay on top of the accessibility over time as well. For example, that page with the missing H1 could quite easily have been just created in the CMS after the site was built by a junior, for example, who didn't understand that an H1 was important, and they may have just left it out or chosen the wrong page template or something like that. So there's this requirement to sort of be across it during the design and build, because it's really difficult to retrospectively improve accessibility up to like a AA standard, and then being across it for all of the stuff you implement moving forward as well, so that you're, for example, adding out text to every single image you upload, and you're writing copy in a specific tone of voice that's accessible for everyone, and that you're structuring a page properly. Yeah, it's quite difficult to achieve, and that's why it's quite difficult to achieve. It's not taken seriously enough, and that's why it just fails more often than not.
Do you think with AI especially, we'll see this improve?
Yeah. You point an agent at any website, even an inaccessible one, it will summarize it and tell you what's going on the page and help you navigate around it. So AI definitely mitigates the impact somewhat, but then a site with great accessibility will be easier to digest by AI as well. So it will if you have a good level of accessibility, your site will naturally just appear more in AI answers. And if people point their agent at the site, the agent will have a better chance of reading it more accurately and using it properly. If you have a fully accessible form, for example, an agent would very easily be able to work through that form and fill it out and complete it. If you've got a form that looks good visually, but then under the bonnet, it's just all over the shop, like the tab borders are out and the labels are accurate, then an agent will struggle to complete that form, and it'll take twice as long, and that will frustrate a lot of users, not just the users who need the accessibility, but users who are like just using the forms because they can't be bothered to fill them out themselves. So I think accessibility is still going to be really important.
We'll probably
wider user base, rather than just people who genuinely need it because they've got bad eyesight, or they have either temporary or permanent damage to their arms or something, so they can't use them properly.
I do feel like AI is the secret to, solving this for people with access needs. So whether it's people with access needs using AI agents to use these websites, and then the AI agents basically fixing all the issues and relaying them back a version it suits their specific access needs. I think that's going to happen. Also, augmented AI assistants as well. So if you're not using an AI agent to kind of visit and use these websites on your behalf, when you visit the websites, the augmented experience fixes all the issues for the user. So I think that would be quite exciting. The AI will essentially read the page and then send it back to that user who has specific access needs as a perfectly accessible page for their situation. But I mean, really, it's the firm's responsibility to make sure that AI isn't, filling in the gaps and having to fix these sites for the user. And I think in terms of consumer duty, well, even though AI is going to help, and it is helping, I think the firms still have the responsibility to have that core code and that core version of the website fixed and accessible. And it'd be interesting to see in a few years' time, if we reran these tests using UX duty, whether, how many of these findings would be found again. So I'll keep the projects for sure. And it'd be really interesting to do comparison reports and see if any of these any of these points are fixed, especially as FCA is starting to kind of clamp down more.
It's our podcast episode sorted for 3 or 4 years' time then.
For 2030, yeah.
Yeah, we're done. So what's the kind of end summary of that then, Russ?
Yeah, so in terms of overall summary, I think across the 12 firms, we've found nearly 600 findings. So we've done 12 studies essentially, and there's been about 600 findings across all 4 episodes. As we've discussed today, the common theme really across bank switching, robo-advisors, mortgage brokers, life insurance is these loud headline offers, which are often quite meaningless because they're for a specific situation, which can be quite difficult to find. So it's not clear whether you're eligible for these headline offers. And it's not clear whether you're eligible before you even start the process. There's a lot of hidden fees. I think there was one mortgage broker where you had to go down to the no obligation meeting to find out the fees, which doesn't feel like it's in the spirit of consumer duty. It's definitely not transparent what we're going to be paying for. The dark patterns around consent for how your data is used, that was a real common theme. And like we said at the start, it wasn't a surprise, but it is a surprise how kind of common it is, I think, across a lot of the teardowns that we've done. And it's an area that really needs to be improved. Complaints seems to be missing or buried in the terms and conditions. 10 out of the 12 firms, it's difficult to find a human or speak to a human, or that route doesn't exist at all. And yeah, the big finding, I think, has been accessibility. So out of those 600, nearly half of them were accessibility findings. Looked at that in a bit more detail. 82% of those issues as well, of those of that 50% were related to screen readers. So I think these firms focusing on screen readers would have a huge would make a huge difference, I think, for those users who are using them. Missing alt text, missing landmarks and headings, making it difficult to kind of go through the pages. We talked about missing headings or H1s, if you understand kind of what that is. And essentially, all these things scramble the page for screen readers. That makes it really difficult to use or describe what's happening. 10% were for keyboard-only users out of all the accessibility findings. So that's where you can't easily navigate just using a keyboard. So that's things like content hidden from assistive technology that people might use. For example, someone with quite extreme access needs might not be using a keyboard and a mouse. They might have another way to interface with the computer. We've seen that before in our usability testing that we've done for our clients. So you need to kind of consider those users who are using assistive technology to access the internet and not kind of keyboard and mouse. And then 5%, which I thought was really low, were firms that didn't meet minimum colour contrast. So I know we've kind of talked about that in length, how important that is for people, not only with eye conditions, but also in situational, with kind of a situational access needs if they're looking at your website in bright sunlight or poor displays. So yeah, that's kind of it. That was in a nutshell what we've found. I think I'll try and turn this into a couple of articles as well, which you can check out on the website and put in some specific examples. But I think we went into this not really knowing what the common themes were going to be. And looking across the 12 firms, there are some which have really kind of stood out. So hopefully that's useful. And hopefully, if you are a regulated firm looking at consumer duty, you can take some of this on board and check your own website to see if you can make some improvements.
Absolutely. And of course, we've got those 3 other episodes, if you haven't caught them, that you can go back and listen to. Pat, were there any surprises from you over the past 4 weeks?
Sadly, not really. I think it's definitely been interesting to see. I guess the surprise was like a lot of this kind of bending the rules in order to generate leads. You kind of see it everywhere. I guess I was quite surprised at how prevalent it was in the regulated space. So in Guernsey, dealing with a lot of clients over here, they're regulated by the GFSC. But universally, if you're regulated over here, you take regulation really seriously. Like all of our clients in Guernsey take GDPR really seriously, because regulation is a fundamental part of their day-to-day life as a regulated business. And so I was quite surprised to see, I think most of these firms were kind of UK based. I was quite surprised to see so many firms just kind of flouting consumer duty, passing GDPR regulations, because based on my experience, regulated finance firms take regulation really seriously. But they're, from a marketing perspective, they're acting like a travel firm or an e-commerce firm, someone who isn't as heavily regulated, who would have less chance of getting caught out by financial regulators. So yeah, interesting, definitely enlightening for sure.
Yeah, it has been interesting, and of course we'll be moving on next week, and we'll take a look at what next episode, what we've got in store in just a little bit. But first, should we play Jargon Busters?
Yep. See how we do with that pool this week.
Yeah, exactly. So if you've never caught this before, I have got a list of industry terms, and each week put the guys to the test to see if they can explain what it means. This week's term is short selling.
I know what that is. Do you want to go first, Russ? You probably know what it is.
You put me on the spot. But I believe it's betting on the stock price going down, essentially. So instead of saying yes, you're kind of looking at it in the other way. We're talking about like bull and bear market. So in a bear market, you can actually make quite a lot of money short selling, because if it's going in the opposite direction, you can try and predict that, and then essentially that's your play on the market. So that's what I think.
Yeah, so I think the way it works is you sign an agreement to buy shares in a company on a future date at an agreed price. And the risk is that the price is either less than you paid for it or higher than and obviously the benefit is the price is higher than you paid for it, or maybe the opposite way around. But yeah, like what you said, Ross, is betting on a company reducing a price. So the short sellers out there will kind of spend days, weeks, months researching into companies that they think are not performing as well as the company would like to, the company presenting to the world. And they're like journalists, investigative journalists. They'll just like unturn every stone and look into the accounts and everything that's available publicly, and look at the history and the decision makers and the leadership team. And they'll build up a picture of companies that are kind of portraying a positive outlook, but actually under the bonnet, just a complete and utter disaster. And then they will short sell them. They'll bet that their share price is going to go down by sometimes in the order of billions.
Yeah, there's
a famous short seller that predicted the mortgage crash of 2008. and made hundreds of billions overnight when it all happened.
That's what I was going to say. It might be the same film, The Big Short, as well.
Yeah.
Definitely worth checking out. I really need to watch that again as well. It's reminded me.
So yeah, I mean, the official definition here: betting that a stock price will fall by selling borrowed shares.
Borrowed shares.
Yeah.
So I didn't quite get the mechanism right.
Yeah,
but no,
we got the essence of it. So well done. We'll have more Jargon Busters next week. And on next week's episode, we move on from Consumer Duty Anniversary Month to the next big regular. I can't say it. Regulatory moment of the quarter. This is the EU AI Act. So what does this involve?
So the EU AI Act came in, it was proposed, I think it was back in 2023 maybe, in response to fears about firms using AI to abuse the rights of normal people. And it proposed covering off a few, sort of categorized AI into different levels, like high risk, medium and low risk. And high risk uses would be like for credit scoring, insurance pricing, CV sifting, stuff like that. Stuff which is actually used extensively today. And I'll be prepared. So I'm going to have a good old rant about AI job interviews next week.
Something for us all to look forward to.
Yeah. And the idea is that it just was, there's certain things that just banned outright. For example, using AI to read like the video call of someone and use it to like predict what their emotions are. Using it for like social scoring, that kind of stuff. There's high risk is like credit scoring, insurance, CV sifting. Low risk is like using it to write emails and stuff like that. And there's other requirements as well. Penalties up to 35 million euros or 7% of global turnover, so pretty significant. So it was due to come in what was the actual date? Last year at some point. No, I think it was due to come in this year, but the authorities just weren't ready to enforce it because the standards weren't fleshed out enough. It was quite challenging. So they pushed back some of the high risk items into 2027. In order to just give them time and give businesses time to sort of adapt their workflows and give the authorities time to put in place a framework that will allow them to actually enforce it. Should be an interesting topic. And the other point is that the UK is not in the EU, so it doesn't apply to the UK. So that's probably an interesting talking point in itself. Like, will the UK become a kind of AI Wild West where anything goes and civilians are being sort of suppressed with all of this horrible AI everywhere? Or will it go the other way? The UK has less regulation and therefore the UK gets, approaches a kind of AI-driven utopia far more quickly than the EU. So that's something that'll be an interesting sort of point to debate as well, I think.
Oh, lots to get into, and that is next Friday. We will be back then. Thank you for joining us, and we'll see you next week.
Thanks. See ya.
Cheers, everyone.
Before we go, it's time for a quick shameless plug. This episode was brought to you by Indulge, a digital agency built on thinking for the global financial services sector. If you're looking for an agency that can specialise in UX and design, production and marketing, then look no further. To find out more, visit indulge.digital. Thanks for listening.